Alrighty, welcome everybody. It is Friday, August 2, 2024, and welcome Income Navigator members. I know it's a exciting day here, not the type of day that we love to have, but part of trading. So not every trade's going to win, and you're going to take a couple losses on some trades. So we ended up taking a few losses today, but uh, we'll we'll cover the markets and we'll cover the portfolios here. And if you had some questions, we'll try to answer those for you. So apologize, I was outside power washing my deck. So I'm a minute or so late, but give me a second. And all right. Excuse me, I'm going to try not to cough and make it through this thing. I still have that going. All right, so yeah, we're down today. Market's only down, 2.5%. You would think the world was ending today, but it is not. It is just a huge volatility spike day, the likes of which we rarely ever see. And it is one of those things that just happens when you're selling premium and you're trading futures, you're going to get that vol spike. So let's take a quick look. And up on my screen, I'm going to take myself off of here so that you can see. But if we take a look at the VIX here, here's the VIX dating all the way back to 2020 at the beginning here. And I'm going to make sure that I keep everybody muted on this, just so we're good. But everybody seems to be good, so appreciate that. But here's VIX on a monthly basis. If we go back to a daily basis. Actually, we'll look at the week. If we look at the weekly basis, the VIX spike today, okay, is larger than any VIX spike that we have seen dating back all the way to here to, somewhere in 2021, November of 2021. It was close, but even that wasn't as big. You have to go back farther than that to see a VIX spike of this size. And let's see if we can go back a little bit further. Let's go back 5 years. Take a quick look at this. So again, today, I mean, this is a ridiculous spike, and there's really no reason for it. Some economic data, not exactly great, but the Fed's already signaled that it may cut, so I don't know that it has to do with that. Unemployment rose a bit. Okay, well, now I guess good news is good news and bad news is technically bad news now that the Fed says they're going to cut. The problem is, excuse me, is the Fed too late now? Is the economy being affected adversely by the Fed cuts? I mean, I don't think one day data point really makes any real difference here. It's just overdone and a little bit of craziness today. And I'm going to take the look. I'm going to look to see if there's a way to take a little bit more advantage of it without getting too crazy. But employment today dropped a bit. Unemployment rate rose to 4.3%. It was expected to come in at 4.1, which was the previous. So unemployment ratcheted up a bit. But I think also what really sent this market down a little bit more after that came in at 10 o'clock when factory orders dropped 3.3%. Previously, it was only 0.5%. They expected 2.7%. So factory orders dropping significantly, that really pushed things kind of over the edge. But like I said, from a volatility standpoint, look at today's spike. There is the last spike similar, which was not even as big, was back here in October or November of 21. And then we got to go all the way back here. This one wasn't even as big in January of 21. Nothing. You have to go back to the first couple of days of COVID to see a VIX spike that was any bigger than we got today. And even on the second day and third day of COVID back here, okay, these weren't even as big as today. So you have a VIX spike today bigger than most of the spikes during COVID, which is, to me, is absolutely bananas. Uh, so only the first day here, the second, the third, and the fourth day, as COVID really started to kick in, okay, you've never seen a vol spike this big in a single day. We're up almost 60% on the VIX today. So it is bananas a bit on. So there's something to be said here. Now, the one thing we do know is that when VIX spikes, it will then revert. So VIX will revert. Only COVID did we see a second or third day of VIX spiking after something this big. Even back here, you had a little bit of a move up. Past that, maybe got up to 30 or so, but that's it. So on the VIX, this is a significantly a pretty significant outlier move. You really don't see anything this big. And anytime that we get typically up into this stratosphere of into the low 30s here, we will revert. So VIX is mean reverting. Volatility is always mean reverting. Price doesn't have to, but volatility will. So volatility will back off. Your IV today is 143 right now, is the IV rank. That is the highest I have really ever seen on a kind of a normal day. I mean, yes, some economic reports, earnings kind of mixed out there. Apple's actually still up today, which is interesting. So Apple's still up, hanging in there. Everything else is down. Microsoft not great. Amazon poor earnings, down, but really the market's only down 2.5%. I don't even think it deserves that necessarily. A lot of this is overdone, but that doesn't help us. So it doesn't help us when volatility spikes like this. Any losses that we're taking today, and I'm going to close. I've closed out a couple 112s. Any losses that you or I have taken today is almost 100% due to volatility. There's almost, maybe oil, because it's selling off. Oil volatility is rising a tad, but for the most part, anything that's happening today is really just related to volatility. Now, if we take a look at the VVIX here, it doesn't have to mean revert, but if you're looking at today, this is a weekly, by the way. If we look at the daily, and let's go back to like a daily chart. I mean, you've never seen anything like this. It is one of the largest spikes that we've ever seen in this time frame. If we go back maybe 3 years, okay, trying to find time frames where you can't find anything that's as close to this 2-day move in the VVIX. So it's an unbelievable move, and nobody wants to be part of history. I think somebody said that in there, but you get a couple of these spikes that get up there, but really not much of anything near this. This is one of the highest levels we've ever seen, and we got to go back into, the beginnings of or into 2021, some here to see any kind of volatility anywhere near this. This is an immense spike today on the VVIX. So the volatility of the VIX, very high. VIX, very, very high. So overall, we're a victim of volatility. And it doesn't really matter what hedges you have on, because they're really not going to cover you for this type of an event. We typically are looking for, this is definitely not a black swan event. I mean, the market has only gone down 2%. So black swan hedges, not going to do anything for you here. And then our normal hedges aren't really doing anything here either. They're up, they're nice, okay, but they're not really helping the account a whole lot. Because it's all volatility related, and we haven't dropped enough. The market technically needs to drop a bit more. I want to see 10% down, not 2% down, and I don't really want it in one day. Now, if the market keeps selling off for the next couple of days, then I think our hedges are going to start coming into play. Helpful, but yeah, there's not much. Not much you can do on a day like today, except you just follow your plan. And what's going to suck and I know, and I already know what's coming from a lot of people is going to be tomorrow or Monday. If volatility starts to revert, okay, you're going to be upset because you wouldn't have been stopped out, but you've got to follow your plan. Okay, you can't look back. So what I'm going to ask you to do is a couple things. As members here, I'm going to ask you to not look back at today and wonder, well, what happens if I hadn't have stopped out because volatility is going to revert on Monday and Tuesday of next week. Okay, I'm pretty sure volatility is going to revert next week. Okay, maybe it's Monday, maybe not, but I would think Monday and Tuesday you're going to start to see volatility reverting. Okay. Which means all of the positions that we had that got into trouble today, they only got in trouble because of volatility. They would not have, been a stop, but you can't take that. You can't take that bet. We can continue to still sell off next week. The markets have been on an incredible tear all year long. And so if we take a look, at the markets, I mean, this has been a super nice, move. And for the most part, since January here or even before, I mean, we've moved up from 4,100 all the way to 57. I mean, an incredible move in the market. And if you look at this thing here, you really haven't retraced a ton. I mean, our high, if we look at the SPY over the last, couple days or so, the highest was back in the 16th. So we are now 6.3% off of our all-time highs. The all-time highs was just set a little bit ago. We're only down 6%, okay, in the market, even though it feels like maybe people are down, 20% or something like that. Don't look at the net lick, okay, number one. Okay, just look at your trades. Now, if you stopped out of any of your trades, the most you took today was a 2% loss on a trade. If you were stopped out on 2 today, you've lost 4%. If you were stopped out on 3 today, you might be down 6%. You should not have been stopped out on more than 3 particular trades today. If you were, I'd have to probably take a look at what you're doing in the plan, but for the most part, hey, don't look at your net lick, okay? It's not going to do you any good. We've been talking about this for weeks, that all we do is trade and play the individual trades that we have. Yes, the market's down 6%. Okay, but the volatility spike is now 154 on the IVR. It continues to actually spike up, okay? It's an incredible move today, the likes of which most of you as traders have probably never seen. It's completely unwarranted, but that doesn't help us that it's unwarranted. We just play what we're given, okay? You trade what you see. So don't look at the net lick. It's going to be ugly, okay? What you want to do is look at your individual trades. And if you've sized correctly, okay, and you've stopped out of, 2 or 3, let's say you stopped out of 3 trades today, you should not be down more than 6% from a realized basis off of where you were a couple days ago, from a net lick standpoint. Net lick will recover, okay, as volatility recovers. So that's that's what we can do. Wide markets today made it difficult to exit right at a 2x loss, and wide markets on MES were even worse. MES was a pain in the rear end to get out of. Okay, I get it. So that's where we are right now. But with IV continuing to pile up, you got VIXs at 29.17, 29.18, something like that. So we'll keep an eye on it. I don't know if that was the highest on VIX today. So what was the high point on VIX? We're pretty much there. So 29.55 on the VIX was the high for the day. I mean, this is just an incredible move. And then the VVIX, the high was 162. Okay, and it's sitting around 150 right now. So we'll keep an eye on that. But if volatility really doesn't get any worse or starts to revert at all today, we'll see if most of the damage has been done on particular trades. And yes, the markets are down. Today, we're down 2.5%, okay, which again is not the biggest down day we've seen, but it is a pretty sizable one. We've had 2 of these in the last 2 weeks. You'd have to go back a long way to even find a day that's close to it. Okay, still one of the largest down days that we've had in over a year. Just anecdotally, I can't say for sure, but just looking at this chart here, I don't see a down day this big, but it's only 2.5%. So I know it feels worse, okay, and I know it feels bad that we're more than 2%, or more than about 6% down or so. So anyway, I just want to point those things out. So a couple things here is, number one, okay, really ignore the net lick and just work the trades that you have. If you stopped out on a couple trades, 2, 3, 4 trades, something like that, you're only down 4, 6, 8%. Okay, there's people that'll drop 30%, day trading or something like that. So don't fret about it. We'll make that back. We've been averaging, 2, 3% a month up. So we'll overall for the account. So we'll work those back. All right. So number one, don't look at your net lick. And number two, don't look back to see what if. Okay. I'm going to tell you that right now, because when volatility reverts, and it'll revert next week, 100%, volatility will drop next week. Okay. Because of that, okay, you're going to look back and wish, oh, I wish I hadn't stopped out, because price-wise, I wasn't even close to anything that you stopped down on. If you guys stopped out today, you closed puts, naked puts, that are somewhere around $4,700. Okay, a $4,700 naked put. Okay, we're at 5,400 right now. Okay, that's 700 points away. Okay, that's another 13%. We were 13% away from getting close to those naked puts at all. So again, it had nothing to do with really the price move. It didn't help that the market's down 150 points today and has a pretty good down day. It's just all volatility, and just got to realize that, hey, you can't really protect yourself against volatility. The best thing you can do is to trade your plan. So a few of you may have stopped out, and I did too, at more than a 200% loss. Okay, I couldn't get out potentially in time. Maybe the markets were wide and maybe it went to 220 or 230 or something like that, but really that wasn't a whole lot more. It's not pleasant, not great, but we're out. Okay, and because we're out, we got buying power back. Okay, we're still in good shape. We're only down 4 or 5%, 5% or something like that, from a loss standpoint. So we have the opportunity, okay, to now look at more trades. I'm trying to keep up with the people jumping into this room. This is the most what we've ever had, and that's not surprising in here. So I'm trying to keep up a little bit with the chat. But the first two things, again, don't look at your net lick, because it's not gonna help you. Okay, it's just gonna make you more upset. Okay, and then don't look back next week to see, well, what if I hadn't stopped out, because this is all volatility related, and next week the volatility will revert and most of these positions will look good. Okay. The other thing is, stop freaking posting your losses, guys. We all know we're losing. What you're doing here, I get it. Maybe it's therapeutic. Okay. It's not helpful to everybody here to just create a ton of panic. It sucks. Okay. Nobody wants to lose. Okay. But hey, it is what it is. Just, trade your plan. Okay. And close your trades as you need to. We're going to take a few hits due to volatility spike, and there's really nothing you can do about it. All right. See if there's any questions in here before I jump into some other things. But overall, we're down 138 points now, so we're off the lows of the session here. But right at 10 o'clock, when the next news came out, that's when this thing really started to tail down, even though we had the spike and the initial unemployment reports, and then we had another down move later. Okay, now we're starting to maybe find some footing in here. You're about on the advanced decline line, you're down about 387 of the 500 stocks are down. Okay, so it's pretty pretty extreme to the downside, and UVXY is up. Now, yesterday, and again, you guys, I see people posting in the Discord, hey, I'm down, I wiped out 4 months. If you've wiped out 4 months of trading today, something's wrong. Now, I'm going to have a gigantic net lick drop, but I have not wiped out anything, okay, because that's all unrealized. My realized losses today are only 5%. Okay? So I think that's what you got to focus on and quit, posting that you've destroyed your entire account or something. You should not have if you're trading properly here. Okay, we're just down on that lick. It'll bounce back as volatility recovers. Okay, and we're going to hit some traps if we slowly continue this downward trend. So I think that's all good. Yeah, don't worry about your trades being down. The only thing that matters is, okay, are you stopped out? Did you follow your plan? I don't care if your trade's down 10%, 50%, 100%, 150. If you're not at 200%, if you haven't stopped out, don't worry about it. Okay, just keep an eye on it and trade the plan. All right, it is what it is. All right, and yeah, just we all know we're going to take some losses today. So just you posting all of the stuff that's down, it's not going to help everybody. Should you reopen those 112s? No, it was a one trade. You took a 2% loss and you move on. Okay, there's really nothing to do. I wouldn't jump back in, try to reopen anything. I mean, you're getting an unbelievable vol spike today, which is giving you an opportunity. And if you want to put some, another trade on or so, but I think Craig hit it on the head. I mean, why not wait another day? I think it makes no sense, okay, to try to rush back in, and because essentially all you're going to do today is revenge trade. You're going to try to win back any money that you lost, and don't worry about it. It is what it is. We've learned, okay, and we'll be in good shape. All right, so let's get going. All right, let's take a look, and we'll take a look at my account. Some of you are wondering why I haven't closed certain trades or something like that. Well, I'm trying to run a Discord channel here, answering 8 million questions, running a video, and trying to keep up with everything. And I have a tough time even managing all of my own trades. So that's why. So if I don't post it, okay, not because I didn't want to, it's because I'm freaking busy, people. Okay, manage your own trades. Don't worry about mine. I'll get mine. Okay, so anyway, sorry to get off the subject on that here. And if I take some losses, I take bigger losses than you do because I have to also answer all the questions and manage the Discord channel. So hopefully you guys got out when you should have. So let's take a look at my account. And if we got to close some stuff, we'll close it. If you're blindly following me, that's probably not a good idea. Okay. All right, so let's take a look here. It's an ugly day. We got lots of down stuff on here. 6A, it's fine, nothing to do there. That thing's down 3%. 6E is down 45, nothing to do. This oil trade here is fine. It's up 100%, nothing to do there. This oil 112 is fine. It's up. You got a nice PDS. And we did get stopped out of the naked put on this one, so we took the loss on that. And the naked and the put debit spread still working. It's up 200%, so it's a nice trap. Now, what's the max on this trap? So this is a one wide, okay, 1,000 multiplier, okay. So it's one wide, 1,000 multiplier, okay. So the most, at times 3 contracts. The most I can make on this is 3,000. I'm up $1,200 on it. On oil, we're in the trap already. You can see we're in the trap, and we're in the trap nicely. Okay, so there's no reason for me to take this off. So I'm just going to share some of this stuff with you guys. So number one, if it reverses tomorrow up 1 point, I'm still in the trap. Okay, so let's just let it go. I mean, can you take the trap profit today? I certainly could. And I don't think there's anything wrong with taking 1,200 bucks of this off today if you want to do that. B, I don't need to do it. And B, we're nicely in the trap. So I'm just going to leave this thing cooking because if oil hangs down here or continues to go lower, and if we look at oil on the day, it's had a pretty good down day. And again, I may have stuff still to close, guys. I'm just methodically going through and explaining to you. And if I take a little bit of a loss, I take a loss. It is what it is. I will manage my accounts. Don't worry. Don't worry about me. Just make sure that you are managing yours. And most of you seem to have been doing that totally fine today. All right, on oil today, we're down to the trend line. Will it bounce? Can it bounce? The weekly doesn't look great. We have a bearish PSAR, so I think with oil looking bearish, there's nothing I would do here at all. Oil looked good yesterday, like a potential bounce scenario, and we did not do anything. So we just waited out. So just let this thing cook. I mean, we can make a little bit more money on this. It's not greed. It's just, why close something out when I'm this far in the money? All right, the next one here is a strangle on oil. Yeah, this one's down 125%. Nothing to do there. On it, we're still a little bit ways away. Oil IV is up decently here. So let's see if oil IV reverts as well. But if you look at the volatility in oil, let's take a quick look at that. All right, so here you go. So here's oil. Look at the volatility in oil. Okay, look at this thing just spiking up. Now, this is the largest 1 week spike we've seen in oil, okay, since, way back here, maybe, okay, which is back in 2023 sometime, a huge daily spike in oil, okay. This is a giant vol spike. This is 3 weeks of volatility cranking its way higher on oil, right? And that's the large reason that we're out right now. So I'm okay with oil. I'm not getting the Strangles down, but oil volatility's up. So I'm totally fine with that position. Nothing to do there. All right, let's get into ES. So we got a 14-day hedge that we have had working now for, which is going to expire today. So this thing's actually going to expire today, and it's actually booked itself a little bit of a profit. So I'm actually going to get out of that thing. If I can book a little profit. Yeah, I'm going to take that off. It expires today, so no reason to let that thing work on. So booked a little profit. Yeah, I'll share my screen. Hang on. Okay. So I had a 14-day hedge that expired today, and I'm sorry, I just booked it for like a $1.15 profit or something. I made like 200 bucks today. All right, so then we also have a 30-day hedge. This 30-day hedge was dead and buried. It has 6 days to go. It's up 4,800. I'm going to let this thing go for today, and then we're going to see what happens on Monday because we only have 6 days to go. So this thing's going to expire next Thursday. So there's not much time left on this. Because there's not much time left on a 30-day hedge, I might take some profits on this thing as well. But I won't do it today. I'll wait till Monday. If things go further south on Monday, this will pay off a little bit more. My guess is volatility is going to revert. All right. And because it does, volatility's already dropped. So the VIX has already dropped a little bit in the last few minutes. So VIX is starting to drop a bit, but I'm letting this thing go. Now, here's a 14-day hedge. This thing's up 500%. Tom, you say in your trade plan, you say you'll look at 400% or you'll see what the market's doing. Okay, this is the or, folks. I'm going to say wait and see what the market's doing. Okay, this is nice, but it's not going to really cover multiple 112 losses for me. So at this point, I'm not taking this off because this is really not going to do enough. The hedge was put on for a reason. That reason for my hedge was to cover what if all of my naked puts were stopped out at a 2x loss and the market drops 10%. Well, the market, or 15%. Okay. Well, A, that hasn't happened. I've only stopped out on 2 long-term 112s. Okay. So I've only stopped out on 2 112 trades today in ES so far. There might be more. I haven't looked at it. Okay. We're going to find out in just a few minutes. Okay. So I haven't stopped out on more. All right. But this is not going to pay, okay, for that. So I need the volatility to expand more, and I need the markets to continue to drop a bit more, and I probably need to stop out on a few more. Okay, so we'll see. And this thing's only going to, if I get stopped out on more, this thing should continue to increase. All right, so I'm not closing a 14-day hedge, even at a 470. This is really nice. It's great today. But you know what? Frankly, it's there to protect me from a massive drop in stock and losses. And right now, I only have 2 112 losses. May have more, haven't looked. Okay, but that's it. So I'm not down that much. My net lick is down, but I don't care because I haven't stopped out on any other trades. All right. I think I've belabored that point. So I think that answers most of the questions that, hey, if you have a hedge, okay, and CW, it's the same thing. You know, hey, it's up 840% for you. That is fantastic. What was the reason for that? I mean, there's nothing wrong with taking profits on your hedge. If you guys want to take the hedge off today and put another one on, go ahead and do that. That's okay. Okay, 840 is a pretty doggone good return. If I was up 840 on this, I would be close to 10 grand. That would probably pay for one of my 112s, okay, which is not bad. I would have mitigated damage on my 112s, but because I have some, potentially other damage in here, we'll take a look on it. So CW for you, 840% in 2 days. That's not a bad move. There's no reason to maybe not take that off and put another one on today. But it's going to be an expensive hedge if you put it on today because of the volatility spike that we have. All right, so something to think about on that. All right, and then these put debit spreads, they're doing something here. There's not a whole lot of anything. They're not helping because they're so far down, because these put debit spreads are not helping you on a volatility spike. Okay, not going to help you on a vol spike. Okay, they're only going to help you if we start to get into the put debit spread or the trap. Okay, and we have 600 more points to go. So hopefully in 600 more points, these things will start paying off. Okay. All right, now let's take a look at other ES positions. See, do we have stuff we got to take off? Let's see here. This one, no. 60% down, 60% down, 140% down. Okay. This one's 140% down. This one's 73% down. Okay. So nothing, only nothing to do there. I did stop out of the October 31st 112. Okay, this is a naked put that's not down enough to worry about. Okay, and then this one here, okay, is I already got stopped out on the naked puts. This one here, the naked puts are totally fine. They're only at 82%, nothing to do there. This one's on 173, not great, but nothing to do there. Now this one's down like right at the 200% mark on it. So it's probably right in that range to take it off. So I probably, excuse me, we'll be looking at this one here today. But nothing else here to do. So there's just one sitting here at 200%. So I'm good. I closed my 2. Okay. If I look at my activity here, you could put 3%. It wasn't a minute ago. No, it's at 240. So there's nothing to do there. All right. So let's take a look. So here's what I did this morning was I stopped out on this oil naked put. I stopped out on an ES 112 naked put here. I stopped on another ES naked put, and then I just took profits on a hedge a few minutes ago. So you can see I booked that whole $1.15 on this thing. So I made $190 today. not really going to put much of a dent in, but it's expiring in 4 hours, so I might as well take $200. I was given a gift to get $200 out of it instead of a full loss, so I guess that's fine. All right, let's take a look at gold. We got a gold strangle. It's only down 15%. Nothing to do there. We got another gold 112. It's up 66%. Nothing to do there. That's in great shape. Bonds, we got just to put debit spread here. We've already taken the naked puts off, so nothing to do on bonds there. Now, hey, we got some bond strangles. Now, this one's down 125%. It's not great, but it's not in danger. This one's down 90%, nothing to do on those bond trades at all. Bill is fine, nothing to do with Bill. And TLT is having a nice day today. We're moving up on TLT. So that's where we are on this. So how come my November ES naked put was at 240% loss? Because that, I think I just explained it, I think, but is this what you're talking about here? This one? So this is a 120-day naked put strategy. This is, on this strategy, if you go and look at the back tests, okay, the strategy here is I take these off at 40% winner or a 3x loss. Okay, the stop is a 4x loss. So I got to follow my game plan on this. Okay, and this is a trade where this is perfect because I back tested all the different stop loss and profit target options on it, and that was the combination I found to be the best. And if I look at these 120-day naked puts, I'm up 18 grand on these this year. Okay, so I'm up $18,000 on these 120-day naked puts, which is fantastic. Right, so I love this trade. But one of the things here is you got to give it room to move. Now, will it stop? Yeah, maybe. Okay, it's down 240%. That doesn't mean it won't, but it's down 240% on the largest volatility spike in 4 years. Okay, not because the market's dropping, it's down on the largest vol spike in 4 years. And my plan says take it off at a 300% loss. And so that's what I'm going to do. And if volatility reverts next week, that trade will still be in play. And my guess is I'll still be down. Okay, now, if I get stopped out, I get stopped out. I mean, this is a $7,300 loss on a $500,000 account. Okay, so it would be a 1.4% loss if I stopped right now. And if I take it to the full $10,000 loss, it will be a 2% loss. I'm okay with that. Okay, it's trading, man. You cannot win every single trade. You guys are spoiled because we have so many winners that, you know, we haven't had any of these losers. And if you really think about it too, and I've got a bigger account, so I've got bigger losses than you guys have on some of yours. But let's go back to, I don't know what we're going to share. Let's just keep taking a look at what's going on in the market here. VIX is dropping a little bit more. So VIX continues to settle down. And also the markets are now only off 2.1%. So the markets have come back a good 20 or 30 points since I started talking. I don't think I can talk for 4 more hours and save all of your trades, but I will do the best that I can to keep talking for you. But yeah, as the longer I talk, the more VIX comes down and the more ES is starting to come back a little bit. So we'll go for a little bit longer. But overall, it sucks. Nobody wants to lose. But if you really take a look at, I get it that I've gone 4 years without a loss on a long-term 112. Well, it happened today, and I booked 2 of them. Okay, so 2 losses in 4 years is not a bad thing. And let's think a little bit about it. If you put on a 112 trade, what's the percentage that you would expect to lose? How many of these long-term 112s do you expect to lose? Okay. All right. And essentially, if you're putting these on at 5 delta, and I want to put a trade on, what's my expectancy? for the most part. Right? Boy, you can put a nice trade on today. Yes, it reminds me, I want to talk about something else here in a minute. Let's go back and take a look at something. Let me share. I know I'm a little bit all over. I'm trying to read your comments and think at the same time, and I'm not chewing gum. So either way, it's I got stuff to do. All right, so let's say, hey, here's something I wanted to point out, and Squeak did it yesterday. But if I was going to put on a 1-1-2 trade today, okay, so here's a 1-1-2 trade that I'm putting on today. No idea what I just did to myself here. Oh, hang on. I just want to take the positions off so you can see a little easier and cleaner. All right, so here's a 1-1-2 trade I'm going to put on. Let's say I wanted to put on a 1-1-2 trade right now. Okay. And if you did this right now, you're going to see a $43.50 credit due to the volatility spike that we're sitting on today. By the way, VIX is dropping even more as we speak. So let's say we put this on. Now, here's the problem. And some of you are getting excited, like, look at the credit I'm getting. Well, here's the problem is right now, you're paying, or you're getting paid $26, $25, something like that to put this particular trade on it at a 5 delta. All right, so let's use this 5 delta. Let's multiply this times 2. All right, here's the problem that I see. For me, I put on a 336. Okay, so that's my sizing, because that's assuming a 2x loss on these. Okay, a 2x loss on these should be no more than 2% of my net lick, right? So this is how you got to determine your sizing here, not just from your strategy builder. You got to also make sure that you can't take more than a 2% loss, which on a day like today was beautiful. We took 2 losses, we lost 4%. Okay, I'm out 4% on my account. Okay, my account's was up 29% yesterday. Through the end of yesterday's day. I can take 4% of that. Okay, we'll make that back next month. That's a month. All right. So, but look at this. So now, what would my loss be on this trade? So normally I'm trading these at 17. Okay. So normally when I put these on, I'm getting about $17 in credit. Okay, which is $51.75. If you doubled 5,100. Okay, my max loss would be $10,000. Well, $10,000 on a 500, it was 520, 530, whatever thousand account was 2%. Okay, so let's assume I have the $500,000 account. Okay, you've got to limit these to 1%, because if you double them for your 2x loss, that would be 2%. Okay, but if you go to put one on today, and you're getting paid, and you're thinking, "Ooh, this is juicy stuff, man! I'm getting $25." Well, now if you put this on and you take a 2x loss, you're going to lose $1,500, or I'm sorry, $15,000. And on this size account, that's now a 3% net lick loss. Does everybody see that? Everybody understand what I'm talking about? Some of you do, and some of you did not there. But you can't just, so now what do you do? Well, I think you just got to move this thing down until you get your extrinsic to 1%. Okay, something around here. Okay, maybe it's going to be a 4 delta now, right? Because you can't have the income from your naked puts can't be more than 1% of your net lick, because if it's a 2x loss, it becomes more than 2% then. Okay, so just because volatility is giving you a gift here on this particular style trade, you can't use the normal deltas that you were. Now, you can leave these deltas the same up in here for your put debit spread. That's fine. Okay. You're still going to make good money on this trade. So let's okay. So here would be my 336 today, but I have to go down here around the 17 mark. Okay. I'm still going to take in $27. Well, if you look at my trade tracker, okay, and I know you guys peek at what I'm doing, you'll notice that almost all of my naked puts are at 1750-ish or so. They're all right around this $17. Okay, so I'm not going to get paid a ton more because I can't. Now, that's because mine are sized properly. But maybe for you, you had a little bit more room to go and you can maybe keep that delta up a bit, but you've got to really watch what you're doing. So you have to drop your naked puts down a bit so that you don't put on a trade where the naked puts would exceed a 2x or a 2% max loss of your net lick. So there you go. So there's one sizing thing that I wanted to point out, and Squeak was on it right away yesterday when one of you was posting, so I appreciate him jumping in before I could get to it, but he was absolutely 1,000,000% correct. And hopefully he saved some of you from some potential future pain. By the way, ES is now only down, 116, 117 now from 150 or whatever that it was down earlier. So we are bouncing as we speak. Again, I don't want you to go back and look at your losses. Okay, don't do it. Okay. It's not a trade rule of mine, but I'm begging you, don't look at your net lick and don't look at anything you stopped out on today and ask, well, what if? Okay, what if I had just waited? Okay, you can't do that. Okay, all you're going to do is screw up your mindset for the next trade, because the next time this happens, you're not going to stop out and you're going to take a 4% max loss as opposed to 2%. Okay, so just don't look. Okay, because it's going to screw your mindset up. You did the right thing by stopping out today. We all did the right thing. It sucks to stop out on 2 ES 112s. It really sucks. I hate it. Okay, but if it's the first 2 112s in 4 years, that ain't bad. Okay, let's also look at one more thing here, and then we'll move on. Hopefully this is helpful and you guys are getting something out of this. Let's just look at a trade here, and I get the fact that this is too expensive, but don't worry about it for now. Okay. What I want you to point out is what's the, at a 5 delta, I mean, the probability of profit is 99.5%, but really you have a 5% chance, in my opinion, okay, of these naked puts getting stopped out. Okay, let's get rid of these two actually. Okay. You really have just a 5% chance of getting stopped out on these, which means, 1 out of 100 or something like that's going to happen. I'm sorry, 1 out of 20 is going to get stopped out on. Okay, 1 out of 20. All right, how many are you putting on? You're putting on 2 a month. You're putting on 24 a year. You can expect to get stopped out on at least 2 a year. Okay, that's the expectation, is that I'll probably get stopped on 2 of these a year. And if you look at the strategy builder, okay, I added this expected win rate thing in here. Okay, so I did adjust my overall annualized expected monthly P&L and my annualized P&L. I adjusted those down because I expected to take some losses on it. So instead of 6552, okay, which is what I expected to make every month, times 12, which was 70, instead of 78,600, I'm only expecting at the end of the year to make 66,000. Okay, that's 12%. Okay, I'm sorry, it's 12,000. I don't mean 12%. So it's $12,000 less that I'm expecting to make because I'm expecting losses. Okay, I'm expecting losses. I'm expecting to not make this full 65.52. Okay, yeah, I've had a great run. It sucks if you're a new member and you've been with us for 2 months and you're taking the loss. I get it. It sucks. It's timing. You should have been with us a year ago. So, sorry. But for those of you that have been with us for a long time, these are your first time you've taken losses on any of these trades. Okay. So and for those of you that are new, this is your 2nd month and you're pissed because you took a loss on a trade that has a great win rate. I get it. Timing sucks, but look at it this way. You're probably clear sailing, most likely for about 6 to 12 more months. Okay, so you win some, you lose some. Okay, but you gotta, you just gotta stick to the plan. But really, I was expecting, based upon everything here, okay, I was really expecting to make $78,000 a year. Okay, but I built in the fact that I will lose, and I'm only going to break 66. Well, what was that difference? That difference is $12,000. Okay, so I expected to not make 12,000 of the money I was going to make, and my stops today pretty much going to be there. Okay, so I think I realistically planned on losing a trade or two. Okay, probably one trade, maybe two. And if we hit a trap or two before the end of the year, we're going to be in golden here, because now this is going to pay even more than we expected. So we will make these back. If the market hangs here, okay, and just trades sideways, okay, and I'm telling you too, if you're a newbie, and Charles, I appreciate it. Yeah, I mean, you can be mad, but I can't time the market for you. And I can't time when you get in here, but I can tell you that it's a solid trade and they work. But what I will tell everybody here is, if this market keeps moving sideways, selling off, and this volatility comes in, the volatility is definitely coming back in longer I speak here. And you can see that, on the chart that we're moving up. So if we keep selling off and we start to hit some traps, man, you're going to be super happy with everything. So that's why we've got some of these traps on. We're going to be in good shape. But I wanted to also make sure that you guys understand that, hey, as these things start to chill out, okay, so this thing was at 200% a few minutes ago, which I did not close. Now it's at 188%. Okay, it's an XL112. I'm just keeping an eye on it here. Doesn't mean I will or won't, but this thing was at 240. It's at 220 now. It's all volatility, folks. Okay, don't look at what you closed, because you're just going to be pissed, and you're going to be mad, and next time you're going to ignore your stops. So don't do it. Just let these things fly. I mean, I'm down decently today on net lick, but I've only taken 2 losses. And when I look at it, hey, 2 losses in 4 years ain't too bad. All right, so we're still in good shape. You guys should still be in good shape. You got to stay positive. Don't look at the P&L. Okay, unless you stopped out in every trade you had, you're still alive and you're still trading. Okay, and we still have lots of good trades that are on. And I hope you all took advantage of the sizing talk that we had earlier in the week. I met with some people privately doing some consulting sessions. You were trading too big. Some of you were on here trading too big. Okay, this gives you a chance to kind of just reconfigure, reset a bit. Okay, and sometimes when we take a loss, it's the best tuition you can ever have. Okay, because what I also want you to do today is, after the day's over, we're going to look back and we're going to see what went right and what went wrong. Okay, I don't think you can learn a ton from a once in a decade vol spike day, which just absolutely stupid in my opinion. However, there is stuff to learn, and I want you guys to learn those things here. And one of the things was, how did your hedges behave? How did your black swan hedge behave? Did a black swan hedge today help you at all? Okay, because this is the stuff that you're going to get hit with on a frequent basis. Okay, today was not a black swan event. Did your black swan hedge do anything to help you stopping out on your 112s today? No. If they didn't, and that's your only hedge, again, I'm not trying to poo-poo it, and it sounds like I am, but even my hedge didn't really do much today. I mean, it's up decently. Okay. Well, now it's not up 4,400 anymore. It's up 3,500 because vol is slowly sinking. Now VIX is back to 25 from 29. So VIX has already backed off now almost 15% on the day. It got a little crazy. And people got a little crazy in the Discord, just posting all their losses, but it's just an anomaly day. It really is. We could still keep going down, but you're at an IV spike, and IV could still keep going up. But really, what did you do today? Did you just follow your trade plan? If you did, everybody who stopped out today, I absolutely 1,000,000% applaud you, because you did the right thing and you followed your plan. And you know what? It should feel good that you had a trade plan and you followed it, even with your loss, and you only took a 2% loss if you did it right. Okay, maybe 2.1% or something if you missed it. But you guys should all feel really great that that you only took a tiny little loss today, 2%. And we'll be back at it. And don't rush in. We're not going to revenge trade. We lost some trades. Guess what? We'll just keep trading the plan and we'll get the money back. I mean, we just came off the best month in history here, okay, at making like 25 grand in this particular account. Well, I've lost 24 grand this month so far. I had a great day on the first, a terrible day today. So we're down 24 grand. We basically just wiped out last month, but we're only on the second of this month. We still have trades to come off for winners, and all of the other ES trades that are still cooking, we still can be taking those naked puts off before the end of the month and booking some more profits. And we'll see what happens overall. But now we got our buying power pretty much back in line. So I don't even know what I'm screen sharing here. So I'm just screen sharing the account. All right. So questions. Anybody got any questions? Anything they want to pop in? There was a lot of things going in the chat, but I think I hit them. I just really want you guys to think of mindset first, and follow your trade plan. You guys really did well. Yeah, we stopped out on 2 trades. Sucks. Okay, but that's it. I'm not down a whole lot more, so we're in good shape. Net lick is probably a disaster. Haven't looked at it, but I'm not even going to do that. Yeah, Igor's on vacation. He logs in a couple times a day when he has signal, so he will let people that have joined or something. We'll get that fixed. Does it make sense to close a trap when the VIX is up? Follow the plan. Okay, you can close a trap. In my opinion, I'll start looking if the trap is up more than 25%, which means I can capture 25% of the total profit I was going to capture. However, it's just a VIX spike today. My trap is there for the price to move into the trap. Price isn't moving right now into the trap. We are not in any traps that we have. So if you still look at our ES trades, we're in great shape. By the way, my BP is at like 54% right now. So now we did get stopped out of 2 trades, but my BP is at 54%. The VIX drops more. We'll probably put some more trades on next week, and we can get some good bargains out there. There's some really great things. Plus, I'm going to be posting stuff on the SPY trade as well. And if we get into that SPY trade, we're going to be buying in Monday, or getting into the next tranche of SPY on Monday. We're going to be getting in at a really decent price with the pullback that we have today. So we're in good shape there, and we got our bill is working great. So we're getting money from that. So we're in good shape. Let's see, any other questions before we jump? We're going to jump in a minute here. Would volatility-based hedges work, buying VIX? Well, typically they don't work. Today probably would have been decent today, but 90% of the time a VIX hedge does not really pay off. They're very expensive. Okay, to buy. It's very expensive to buy VIX. Okay, and you really need a big move. And what would you be buying? You're going to buy just a call Okay, if you want to buy a call in VIX, it's expensive. Let's go take a look at that really quick. And this will be the last thing I think we'll do. But let's go buy VIX. Okay, so let's go buy VIX. And what do you want to buy? Maybe like an 18-day trade on VIX. I mean, I don't know what you would buy, but let's say we want to, I'm so used to selling, but let's say we want to buy the 26 delta. Okay, you're going to pay a couple $100 for this thing. I don't know what it was at yesterday, so it's hard for me to tell you what it's moved up to today on this spike, but it's moved up decently. Okay, but how many of these do you want to buy? How much is this going to pay off for you? Right, so if I bought this one contract, VIX has to spike to 35 for me to make $700. Okay, so I'm going to need a lot of these, right? To make some money. Okay, how much did you want to make today? If we spiked up to 30, okay, or if we spike up to 35 on VIX, I mean, that's a pretty hefty move. Let's just say 30. Okay, if VIX moves to 30, this is only going to pay me $350. Maybe pay me 700 if with the curve. So I have to spend $3,500 to make $3,500 if VIX goes to 30. The VIX has to go to like 40 for me to start to make any real money. Really probably 35 to 40. I just think it's expensive and not really worth money to buy VIX. Now, what I will tell you guys is if you watched the video with Tony Rehan, Tony from Mexico, and I yesterday, SVXY, I think this is something to look at here today. Man, I hate to get into trades, but let's take a look at this right now. Yesterday, and yesterday, Tony sold the 55. So that's probably not, and I know he sold it for like $1.50. So not the best trade. Okay. I didn't want to do it because I expected today to be ugly-ish. So I didn't do anything on it. But now, what if you, so I don't know if you guys saw the segment or not, but let's talk about SVXY here because I think this is a trade for you. Yeah, and I wouldn't be buying VIX now, 100%. It's the question was, I'm just not sure if the question was, would it have been a good thing to buy VIX? I don't think it would be a good thing to buy it now. Okay. All right, so let's take a look at SVXY. I think selling the 50 here is not a bad move. Okay. It's not the greatest thing on buying power here, but let's just take a look at this thing. Okay, maybe we sell 2 contracts of this thing. Again, not a fantabulous return, hard to borrow, but if you have margin and you have PM, it's not a bad trade. Okay, SVXY only really goes up over time. This is the largest weekly drop in SVXY that I have ever seen, ever. In fact, we have to go. Let's see if we can even go to COVID and find it. Nope. Okay, this is today, this week, or I'm sorry, this month rivals one of the largest COVID drops in the SVXY. Okay, so this is one of the largest drops in the history of SVXY. Okay. And get the spreads are huge, guys. Just hang with me here. Okay. Look at this thing. Look at the trade on the SVXY. Now, UVXY, terrible. Okay, it just decays and goes down. UVXY and VIX, but UVXY especially, this is a terrible trade. Okay, yeah, spike today. Okay, you look like a hero if you did it, but really you've just lost money for your entire life on this. But SVXY, when you're looking at one of the largest down weeks or 2 down weeks in a row since COVID, bigger than the first 2 weeks of COVID, okay? So we're looking at a massive down spike, nothing the likes of that we have seen for years and years and years, okay? went down here. It's actually recovering off of its low. I think if you're looking at this chart, selling the 50 here, and right now we're at 51.63. It would have to get worse than it got at the worst part today. I think this is a not bad trade at all. I would really strongly consider buying this. And Tony was pointing out that he knows people, because this thing has upward drift. It only drifts up. It almost never drifts down. It always recovers, and it will 100% snap back. Okay, 100%. I'm telling you right now, this thing will snap all the way back up here, okay, as quickly as it dropped. Okay, it'll snap back up within, a week or 2 weeks, 3 weeks, maybe even a couple days. Who knows? But I'd say a couple weeks, this thing's snapping back up here. Okay, it only drifts higher. It's one of the only items out there that will drift higher over time. Okay. So I'm not saying you should buy these or whatever, but what I'm saying is if you wanted to trade something in here, is it going to, not revenge trade, not make a huge month. Don't start trying to get all your money back tomorrow. Okay. That'll be rule number 3, which is revenge trading. Okay. So number 1, don't look at your net lick at all. Log off. We're done. Okay. Nothing to see here today. VIX is dropping. Okay. ES is down. Okay. If you don't have anything that's close anymore because you stopped out, go enjoy the rest of your day. The weekend next week will be better, guaranteed. Okay. Number 2, don't look back next week to see what if I hadn't stopped out, would these things have recovered? Because they probably will have recovered, or they would never have hit those stops by next week. Nothing we can do. You're just going to make yourself mad, and you're going to start emotional trading. And number 3 here is don't try to get any of these losses that you took today, which shouldn't be big, 2% times however many stops. Okay, so 4% for me, 6% maybe. Losses, not a big deal. I would consider, you just got to go back to your trade plan and just follow it. Don't throw on extra trades to try to get the money back quickly. Just follow the plan. What's the plan Monday? Right? But this 50 or maybe even the 49, okay, this 49 is not a bad looking shot here either. This thing's, I think it's not a bad trade at all. Yes, it's high buying power, but I'd take a look at this thing. I'd probably do a 50% profit target on this thing if I did it, maybe a 2x loss, or maybe do no loss on this thing, because it will 100% recover, because volatility will always snap back, always. Okay, write that down, that volatility will always revert back to the mean at some point. Okay, it may take a week or 2, but volatility will always revert back, okay, to a mean. Right, so it's so stretched right now. Okay, this is the opportunity for you, I think. Take a look at SVXY. I'm going to leave it there. And we'll let you guys go. Enjoy a great rest of your day. Okay. Great job for those of you stuck to your trade plans. Okay. Even if you took some losses, it's all good. Stick to the rules, and we'll be back at it next week. I'll stick around in Discord. We'll answer questions. You guys have a great rest of your day. See you, everybody. Bye-bye.